Good afternoon, folks. Welcome to Thursday's Liberty Call. It is August 11th, 2022. Hope everyone's having a fantastic day out there. The Astros are playing pretty good. They got a day game on YouTube today. So if you've been flipping around your dial looking for the Astros game that started at, I guess, 1:10 Central, you've probably been missing out. But they've been on the interwebs all day. So I've got it on the TV. We are up. I say we. I'm not on the team. I wish. Love the Astros. But the Stros are up 5-0 to the hated Rangers. And what is it? Bottom of the seventh, no outs, 2 on. Yuli is on base. He's on second. He's gone 3 for 4. And Tucker just got a base knock, and he's on first. So boys are playing pretty good. Maldi hit a 3-run home run to start off the scoring earlier in the game. So the big man came through at the plate like he has been the last couple of months. I know he had a rough start to the season, but he's playing pretty well now. Anyways, you didn't come here for all this Astros knowledge, even though I have tons of it in this bald head of mine. But if it's your first time watching, give me a big old like, share, subscribe. And let's go ahead and jump in and see how the markets did today. The looks like a lot of the rally or the excitement from no inflation, we'll talk about that in a minute, looks like a lot of that exuberance died off. Let me go to my chart here. Let's go to the 1 day. Yeah, it looks like it lost most of its steam around about 1:20 Eastern time and then went flat. The S&P 500 went in the red, and the NASDAQ definitely went in the red. So anyways, all right, let me bring back up my screen. All right, the Stros scored again, 6-0. Dow finished the day basically flat at up 0.08% at 336. The S&P 500 was basically flat also, down 0.07, closed at 4207. NASDAQ was down 0.58%, closed at 12,779. Small caps are up a third. The VIX today, it was up all day long. So that was my assumption that the rally was kind of short-lived and was going to turn tail at some point today. The VIX was up 2.33%, back up above 20 at 20.20. Moving on to the other internationals. That's going to be a fly ball. Canada was up 0.53. Brazil was down 0.47. Mexico up 1.33%. Scored on a sacrifice fly. Up 7-0. Jumping across the Atlantic in, where are we? Here we are. Germany. They were flat at down 0.05. The UK down 0.55. France up 0.33. The Euro Stoxx up 0.21. Netherlands up 0.21. Spain up 0.33. Italy up 0.69. Switzerland up, or basically flat at up 0.02. And Portugal up 0.47. The Russian markets, the MOEX was down 0.85. The RTSI was down 1.08. Moving on over to the Asian markets, Japan was down 0.65. The rest of these are in the green. Australia up 1.12. New Zealand up 0.46. In China, the Shanghai up 1.6%. The SESE component up 2.05%. China A50 up 2.03. The DJ Shanghai up 1.71, and the Hang Seng up 2.4. And the Taiwan weighted came in at 1.73. So if you remember yesterday, all of this, everything but Asia was majorly into the green, and the Asian markets is what took it in the gonads yesterday. Kind of the reverse today. Again, it wasn't too terrible, other than the NASDAQ, which I think some of that had to do with people coming to the realization that, or maybe it was just what do they call that? A pump and dump. A lot of the big institutional traders get in there and, pump up the stock by a lot of buying. And then once it goes up a few percentage points, they dump their positions and move on and let everyone else who thought the rally was starting is now going to be stuck holding the bag. So anyways, all right, well, let's go ahead and read through today's market recap. S&P 500 pairs gains as Treasury yields move off lows despite easing inflation. The S&P 500 pair gains Thursday as Treasury yields bounced off session lows but remained supported by further signs of easing inflation and a jump in energy stocks. The U.S. Producer Price Index, a measure of wholesale inflation, declined by 0.5% in July after rising 1% in June, driven by a large decline in energy prices. It was the first monthly decline in more than 2 years, and following Wednesday's softer consumer inflation report added to expectations that inflation is nearing a peak. I know if you say it enough times, it might actually become true. So, quote, I think inflation will continue to look better and will give the Fed more of a reason toward the end of the year to potentially signal a pause, said Jimmy Lee, the founder and CEO of Wealth Consulting Group, told investing.com in an interview on Thursday. Bet that the Federal Reserve isn't likely to dramatically step up the pace of monetary policy continued to gain traction with the odds of a 75 basis point hike in September falling to 19% from 34% a day earlier, according to investing.com's Fed Rate Monitor tool. Fresh signs of easing inflation came just as the labor market continued to show strength as jobless claims of 262,000 in the week ending July 30th fell short of economists' estimates. Quote, the modest pickup in claims suggests that turnover may be increasing in weaker firms that are struggling with slowing growth, Jeffrey said in a note. Tech, meanwhile, struggled to hold gains as Treasury yields rebounded from recession lows, forcing Google parent Alphabet, Meta, Apple, and Microsoft to pair some gains. Energy stocks, however, supported the broader market, rising 2% on the strength of oil prices and demand optimism after the International Energy Agency lifted its oil demand growth estimate for this year. The IEA boosted its outlook on oil demand for this year by 380,000 barrels per day, with demand now seen rising by 2.1 million barrels per day to a total of 99.7 million barrels per day in 2022. The earnings front offered a mixed picture. Walt Disney was a standout performer, rising more than 4% after its quarterly results topped estimates. The company also said it would hike the subscription price of its streaming service, Disney Plus, and launch an ad-supported version of the service on December 8th. The price hikes provide a, quote, path to profitability for Disney's streaming business, Credit Suisse said, but, quote, streaming losses will be higher than expected in Q4 2022 and fiscal year 23, though tough still peak in fiscal year 2022 and hit profitability during fiscal year 2024. Wow. So they got to wait 2 years to make some money. Bumble Inc., however, after the dating service operator slashed its full year revenue guidance after delivering mixed quarterly results as losses came in wider than expected in the second quarter, its shares fell more than 7%. Six Flags Entertainment, meanwhile, fell more than 19% after reporting second quarter results that fell short of expectations, weighed down by a 22% drop in theme park visitors. So yeah, kind of a mixed day there. All right, let's jump into some news about the producer prices. U.S. producer prices fall in July. Weekly jobless claims climb. U.S. producer prices unexpectedly fell in July amid a drop in the cost of energy products, and underlying producer inflation appears to be on the drawdown trend, while jobless claims rose for a second straight week in the labor market that remains tight. The producer price index for final demand declined 0.5% last month, the first negative monthly reading since April of 2020. The Labor Department said on Thursday the PPI climbed 1% in June. In the 12 months through July, it increased 9.8% after advancing 11.3% in June. Economists polled by Reuters had forecast the PPI would rise 0.2% in July and increase 10.4% on a year-on-year basis. So they were a smidge off. There was a drop of 1.8% in goods prices after a gain of 2.3% in June. A 16.7% fall in gasoline prices accounted for 80% of that decline. The price of diesel fuel, liquefied petroleum gas, and residential natural gas also fell sharply, although I have not seen that at the diesel pumps where I go. However, food prices gained 1% after declining 0.2% the prior month, while the cost of services edged up 0.1% after advancing 0.3% in June. The government on Wednesday reported consumer prices were unchanged in July, helped by a drop in gasoline prices after a surge earlier this year, but underlying price pressures nevertheless remained high. Excluding the volatile food, and energy, and trade services components, producer prices rose 0.2% in July. The so-called core PPI increased 0.3% in June. In the 12 months through July, the core PPI advanced 5.8% after rising 6.4% in June. The Federal Reserve is mulling whether to raise its benchmark overnight lending rate by another 50 or 75 basis points at its next policy meeting on September 20th and 21st in its bid to tame inflation running at more than 3 times its 2% target. The U.S. Central Bank rate setting FOMC has raised its policy rate by 225 basis points since March as it battles to cool demand without sparking a sharp rise in layoffs. Quote, a potential peak in inflation measures is a welcome sign for consumers, businesses, and the FOMC, but historically elevated price dynamics churning in the economy will likely persist through the end of the year, said Mahir Rashid, U.S. economist at Oxford Economics. Yields on 2-year Treasury notes, the U.S. government bond most sensitive to Fed policy expectations, edged lower, and CME Group's FedWatch tools showed a modestly higher likelihood that the central bank will raise its policy rate by 50 basis points next month. And let me stop there as far as all this talk about inflation. And I know President Moron came out yesterday. I'm not just crapping on the Democrats. I think Cheeto Head was an idiot too. So granted, I think he's better than those on the left. That doesn't mean anything in the grand scheme of things. The federal government's corrupt to the core. But he came out and said zero. Here, let me get in the screen. Zero inflation. Well, not true. Inflation's still up 8.5% year over year from a year ago till now. So, and probably what I might do tomorrow is total up everything, all the inflation numbers from the beginning of the whole scamdemic, and see where we stand today. I put it probably at about 15 to 18%. Is probably the gross inflation we've seen over the last 2 years and change. So not great, when we should have probably only seen about 4% total over that same amount of time. But it's, again, I would much rather have, I would respect these people if they actually came out and were honest about the situation. Yeah, is it a smidge of good news that, inflation looks like it's slowing down at the moment? Yes. That is certainly good news. But to say inflation is zero, I mean, it's like Michael Malice says. And if you don't know who Michael Malice is, look him up on Twitter. He's got a podcast called You're Welcome, Y-O-U-R, welcome. He's a bit of a linguistical magician. But anyways, and like the way he puts it with the media, the government, most folks on the left, is that they might say things that are factual, but they're not truthful. And it's like, and I can't think of anything. I mean, well, the inflation number is a perfect example. Is it factual that inflation increased by 0%? Yes. But I mean, to the everyday American, oh my gosh, to the everyday American who is dealing with inflation right now, it is definitely not, zero. I mean, most of us would love to go back to the summer of 2019 and, deal with the costs that we were dealing with then versus, the fuel prices and everything else that we're dealing with now. And granted, I mean, fuel prices, they fluctuate. I mean, even during, Trump's administration, the price of gas, it did go down, it did go up. It was probably within a buck range either direction from its mean, but to just be disingenuous and blow smoke up people's butts, I have a real problem with. And maybe this is just my personality. I have trouble lying to people, but anyways. Let's jump back in. The number of Americans filing new claims for unemployment benefits rose for the second straight week. The Labor Department also reported on Thursday, indicating further softening in the labor market. Initial claims for state unemployment benefits rose 14,000 to a seasonally adjusted 262,000 for the week ending August 6th. Economists polled by Reuters had forecast for 263. So, they came in under forecast. Awesome. That's still below the 270 to 300,000 range that economists would say would signal a material slowdown in the labor market. Quote, demand for labor remains quite tight. The relative stability of continuing claims suggests that workers who are let go are still having a relatively easy time finding a new job, in quote, Jefferies economist wrote after the data was released. The number of people receiving benefits after an initial week of aid increased 8,000 to 1.428 million during the week that ended for July 30th. The so-called continuing claims are a proxy for hiring. The U.S. economy unexpectedly contracted in the second quarter. See, again, that's right there. Nothing was unexpected about the contraction in Q2. I mean, anyone who's been paying attention the last 2 years, and granted, I sit here and stare at this crap, all day long, and maybe that's why I'm just more aware of it. But when journalists say things like that unexpectedly, I mean, and maybe that's my job, is just to point out the fallacies in their arguments. Contracted in the second quarter, with consumer spending growing at the slowest pace in 2 years and business spending declining. The second straight quarterly decline in GDP largely reflected a more moderate pace of inventory accumulation by businesses as job gains overall have stayed strong. The economy created an unexpectedly robust 528,000 jobs in July. See, that's a perfect spot to put that there. Unexpectedly robust 528,000 jobs, because I think the number they were looking at was like half that. So that's where you would use that word, unexpectedly, when you didn't expect it. In the previous paragraph, we didn't expect Q2 to not look very good because Q1 was a mess, and the whole quarter didn't have good numbers all through it. So the unemployment rate fell back to its pre-pandemic low, and wage gains surprised to the upside. The Labor Department announced last Friday in a monthly employment report that it will make it harder for the Fed to bring the economy into balance soon. All right. Okay, well, some good news, I guess, for folks who are on Social Security or will be receiving those benefits at some time soon. Granted, once the Republic collapses, you're probably going to be SOL and going to have to make other arrangements, because I, for one, am not going to pay back into that system again after the government collapses. All right, this is titled, Social Security benefits are projected to increase. Here is how much. Social Security recipients are on pace to receive the biggest raise in more than 40 years for 2023, although cooling inflation has brought the projection down slightly from prior estimates. The projected COLA, or cost of living adjustment, for 2023 is 9.6%, according to Senior Citizens League. That bump would raise the average retirement benefit of $1,656 by $158, according to the organization. And before you yell at me and say, you don't care about older people, well, that's not true. I care a lot about older people. I'm in this business to help people manage their money through their earning years and their retirement years. But being fleeced by government agencies for money I'll never see, I have a real problem with that. So, what'll happen in the future? I don't know. Maybe we'll sell off, the national assets, and I'll take a trade instead of giving me, back the money that you stole from me for Social Security and Medicare and all that good crap. I'll take 1,000 acres in Rocky Mountain National Park. Sounds like a fair deal to me. Even swap, and I have to pay no property taxes on it. That'd be even better. Let's see here. The Social Security Administration will announce that the actual adjustment for 2023 in October, based on a calculation that compares the average consumer price index from the third quarter of 2022 with data from the same period last year. Wednesday's estimate factored in consumer prices from July, which rose at 8.5% over the same time last year. That was down from 9.1% in June, largely due to falling energy prices. A fat raise would be good news for the roughly 51 million people who collect Social Security retirement benefits, but it will fall short of many recipients' needs. The 5.9% COLA for 2022 provided no match for this year's inflation, so many have had to dip deeper into savings to cover higher prices on essentials like gas and groceries. Yet the raise could also lead some unwelcome consequences. For example, it will likely subject more certain beneficiary benefits to federal income taxes. If you file an individual tax return and your income is between $25,000 and $34,000, you may have to pay income tax on up to 50% of your benefits. If your income is more than $34,000, up to 85% of your benefits may be taxable. Income for these purposes is defined as your adjusted gross income plus non-taxable interest. plus half of your Social Security benefits for couples filing jointly. If you and your spouse have income between $32,000 and $44,000, you may have to pay income tax on up to 50% of your benefits. If your income is more than $44,000, up to 85% of your benefits may be taxable. Higher income may also disqualify some beneficiaries from needs-based assistance programs. What's more, the boost might push some higher earners into the bracket where they have to pay income-adjusted Medicare premiums for 2022. Oh, rats. Rangers just scored. Well, there goes the shutout. Where were we? For 2022 individuals whose 2020 income exceeded $91,000 and couples whose 2020 income exceeded $182,000 have to pay more than the standard Part B premium of $170.10 a month. Higher earners also pay more for Part D drug plans. Awesome. So it sounds like, again, I'm not giving a hard time to people who paid into the system and received something back. But for folks my age, odds are it's not going to be there. It's been out of money for years. All we can really thank is our, politicians going back to the 80s when they started raiding the Social Security piggy bank. And, yes, they've put bonds and treasuries and things like that in there. But that's only as good as as the guarantor. And I don't think the U.S. government is a good guarantor at this point. So anyways, all right. Well, hope everyone has a fantastic night. If anyone has anything needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. And I'll be back tomorrow with the weekly wrap up to cover all the data that came out this week and any new news that comes out over the next 24 hours. So hope everyone has a fantastic evening, and I'll talk to you then. Bye-bye.